All right. First live session we've done in a while. Prashant has a question. Prashant, go for it.
Yes, I have asked you the same question a couple days back. So basically, I would like to know how you decide the size of a position when you put on. So for me, all the zones that we draw, those looks like the same to me, whether resistance zones or support zones. How do you decide whether to go for 50K or 100K? Because just to give you an example and my thought process, when I saw the first trade of GBP JPY, you had a 50K risk. And I was under assumption that when you will put on GBP CAD, as 50K is already there, 50K risk is already there, you are going to put on 50K risk again, not to make sure that the risk is in control. But you added 100K, so I was a little surprised. So that's why I wanted to know your thought process, how you decide the position size.
Perfect. A very good, very insightful question. So there are two reasons. Okay, so the first reason why I will use dynamic risk for various trading opportunities is because every single trading opportunity is slightly different. Now, this is like saying like every person is slightly different, right? We're all still humans, but every person is like individual in terms of our dynamics. Some people are smarter than others. Some people are better at playing basketball than others. Some people suck at trading, and other people are not so sucky at trading. And so every single trading opportunity is similar in the sense that you are sometimes going to have trading opportunities that present themselves in such a way where your brain that has all the experience seeing the shit play out hundreds of times, you recognize trading opportunities that are either still worth taking, but just maybe not risking as much as you normally would, or trading opportunities that are very, very, very high quality in your subjective, discretionary, intuitive opinion. And then on those, you think like, this is just a painfully good setup. And so on those, your intuition then dictates this thing like, you know what? I think my risk tolerance is a little bit higher for this one. Instead of 50K, for me personally, I might risk 75K or 100K. For any of you who are trading, you say you're risking $1,000 or $100 per trade, you might elect to risk maybe 1,500 or 2,000 or 150 or 200. And so the quality of the trading opportunity is what dictates the risk. So whenever we break down individual chart examples, I'm going to give you two examples. We're going to first cover GBP JPY, which was the one I risked 50,000 on. I think that was GJ, right? Yeah. Yeah. GJ.
Yeah, yeah,
Okay, cool. And then
GJ,
G
yeah,
yeah, and then GBP CAD, which I just
100K.
$100,000 risk. I just went in full degenerate 100K risk. So for GBP JPY, and I want to preface this by saying everything here is subjective. So just keep that in mind. There are no rights and wrongs. There's no black and whites. There's no good or bad. There's no absolutes whatsoever in trading. It's all dictated and predicated upon experience. So whenever I entered GBP JPY, I sold. We'd have to go back into the Discord history to look exactly where, but it was either here or here. It was one of these right here. And the reason I risked 50K was because I saw this previous high right here that had gone that far into the zone. And I thought, price, it could bounce here because it is a pretty clear resistance zone, right? We've had price bounce around here multiple times in the past before. So, in my opinion, it looked pretty good. However, I still was looking at this and being like, but we could really go up and test that as well. And then that would still be a valid trade in and of itself, right? It's on the daily chart. It's a previous high. We had a huge drop from there. And so what I wanted to do is I wanted to still give myself some room to do one of two things. Number one, be able to add there at that resistance zone if price got there. So I have 50K risk and then I can add again there, a little bit more risk. The risk might go from 50K to 75K or 80K, but the quality of the trading opportunity and the likelihood that we see a bounce there would, in my subjective experience, slightly increase. So that would then justify the increased risk threshold. So whenever I have some shit like this where it's worth taking, right? Because like the basics still are present. It's at a resistance zone, and I think it's gonna, maybe bounce. So it's still worth taking, but it's just one of those things where I want to put my stop past that. And since the stop is going to be way up there and we can have a huge run all the way up to there, and I want to add or re-enter if I do get stopped or close the trade, I'm just going to risk a lower amount on that. Whenever the trading opportunities present themselves that are a bit more cut and dry and clear, like GBP Canadian dollar for me, these are the ones where I'm like, This is a very good trading opportunity in my very humble, shitty trading opinion. And so what I will do is say, you know what? There's no recent highs where we had price spike way past the zone. There's no stuff that would dictate that this is a zone that is like that unclear. Because whenever we just draw the zone, right, you just connect all the highs. One, two, three, four times it got into the zone. So before it got here, it had already been here three times. When there's no other like weird kind of like spikes like that where it's gone past the zone, and then you'd have to put your stop loss past that high even if you're selling down here, then you could add or close and then re-enter and do all this other shit. When there's none of that and it's just simply nope, it is a super clear resistance level. And if it breaks above, the trade's invalidated. As you see where my alert is, Prashant, right there. Alert's just right there. And so if it were to break above, I would have looked to try to get out of the trade a little bit early, maybe close at a partial loss, 30K to 50K loss out of the 100K. But in this trading opportunity where there's not too many like moving parts, there's not too many moving targets, there's not too many confounding variables, I will enter my, generally speaking, my full risk on a trade, which is right now 75 to $100,000. So to summarize everything and kind of recap, the quality of the trading opportunity dictates the amount of risk tolerance I have, and therefore how much I risk. Now, how the fuck do you know exactly how much to risk? Because that's the big question here. The simple explanation, even though it's not a sexy explanation, is that it just comes from experience. You have to get enough experience and then use that applied experience. And that's what gives you the wisdom to be able to decide, number one, whether or not to actually take a trading opportunity. And then number two, what dollar amount to risk on that trade. You may not have that right now, which is perfectly fine. I went through years without having like this intuition, this discretion. But as you get into trading further and further over the course of 1, 2, 3, 4, 5 years, especially break even or profitable trading, your brain starts to subconsciously recognize which trading opportunities present, let's just say, more optimal entries, a more optimal risk structure, a trade that is quote unquote less risky than, let's say, another trade. And then you can then use that discretion as your edge to then allow you to make a little bit more money on trades that are very high quality. And then if you take a trade that is still worth taking, but just not as high quality, you can still participate, but you're just going to adjust the risk according to whether or not you think that outcome is likely to result in a profitable trading opportunity. So that is the long-winded explanation to basically say, if you think it's a really good trading opportunity, you can risk a little more. And if you think it's an okay trading opportunity, still take it, just risk less. Any questions or any thoughts, any comments?
Yes, so sorry, I have two follow-up questions on this one. So, first follow-up question is when you say correlated means to limit your risk on a correlated pairs, right? So, the correlated pairs can be GBP JPY and GBP CAD, and it can also be Australian JPY and GBP JPY. Is that correct?
That's correct.
Okay. And second question is, how many sizes do you have? Means I understand 50K and 100K, but usually what I've seen is that a small risk, medium risk, and high risk. So let's say small risk is 50%, sorry, 25K, 50K, 100K, etc. Uh, I have seen you as your account has grown, you have changed your sizes. So is it a three or a two? How many of you have? And how many of you recommend for us to have?
Hmm. I think generally speaking, it's two risk thresholds. It's like a lower risk and then a, let's say, quote unquote, normal risk or higher risk option. So it's generally two. However, that does not completely encapsulate all of the nuance because there are times where, let's say, I get into a trade and then I start at 50K risk, but I have a plan to add if it goes against me at the next designated, like, say, resistance zone. So I'm just going to enter another sell. And I make sure the stop loss for the first position is way far above that first resistance I'm selling at, as well as the second potential resistance I could sell at. The thing is if I add the same lot size up there at that second zone, the risk then goes from 50K to maybe 70K or 75K or 80K. And so how do you quantify that in terms of a metric that you're trying to explain very easily? Like, is it this or is it this? We can say most of the time it's either this or this, meaning I risk either 50K or 100K, at least at this stage, because when I started the account, I was doing like 25K to 50K risk when the account was at 350,000. However, even though we can generally say it's two numbers for the risk threshold, there is a whole slew of dynamic, nuanced amounts of risk in between there. And if you look at one of my last trades, which was I think a month ago, it was one of the biggest trades in my trading career. That trade had a $150,000 risk, I think, or maybe even a little bit more, maybe like 170 or
Correct.
something. Yeah. And so it's just going to vary depending on the trading opportunity. So your second portion of that second question was, what do I recommend for everyone else to do? The first thing I recommend is with the disclaimer to say, do whatever the fuck you want. I'm not a financial advisor. This is just all entertainment. This is just all bullshit. But my real answer after that is to say, do what feels right for you. What I would generally kind of nudge you towards is pick just two numbers. One is like a lower risk number that's you're going to take if you still think like this is worth taking. I just don't want to like bet a lot on this one. Use that lower risk number. And then if you find a trading opportunity that is just very, very, very good in your humble opinion, based on your experience, your discretion, your intuition, then maybe risk that higher number. One thing I will say that you'll know whether or not you're doing this quote unquote optimally is because you'll get a weird feeling inside you if you start getting into a trade and you're placing an amount of risk on it and your spidey senses and your let's say your like a mini mild fight or flight response is happening where your heart starts beating a little faster, you start breathing heavier, you start getting a little bit more anxious thoughts, you'll know you're probably risking a little bit too much. Whenever you're getting into a trade that you think is likely to play out, your the amount you're risking on your trade should reflect your confidence in how likely that trading opportunity is to play out. And you'll know that very quickly because you'll put in the lot size. You're going to be risking, for example, what is your, let's say, low risk threshold number on a trade, for example? What is it?
For me, the minimum size means the smaller size is 1200 and larger size is 2400.
Okay, so the first one was what?
1200, $1,200, and the larger size is $2,400.
Cool. So 1200 and 2400. So if you get into a trade and you think it's good, and then you get everything all set up in your broker terminal to place the trade, and then it's $2,400 risk, but all of a sudden you get this really weird feeling inside that's like, ooh, I don't know, 2,400. That is a very good sign. You should say, all right, let's dial it back to maybe the 1,200 risk
Cut it
threshold,
down.
right?
Okay.
Yeah.
Yeah.
And then when you do that, then whenever you're about to place it at the $1,200 risk, even if you originally thought you could have risked more on it, whenever you move it back to the 1,200 risk threshold, then you might feel more comfortable and say, okay, I can get behind this. This feels right. Do it that way. A lot of people, they say, don't use your emotions in trading, but they fail to acknowledge the fact that trading is so fucking subjective that everything is basically generated based on you visually looking at a chart, subjectively interpreting it, and then using sensations inside ourselves that we call emotions and feelings to then make a trading decision. Humans are not robotic computers, right? We can kind of sense things, we can kind of feel it out. If and this is just to say that if you notice you're getting into a trade and you're getting that weird feeling and that weird feeling in your stomach or chest, you're like, ooh, 2,400. I don't know about that for this one. Like that just means you should probably lower it to the lower risk threshold. And if you're still feeling that way at the lower risk threshold, which for you is 1,200, then I would just not take the trade. Or you can take it but risk like something stupid like $100 or something just to see what would have happened and would have played out to get that data and get that experience. If your intuition is screaming at you because you're risking a certain amount on trade, lower the risk. And if it's still screaming at you, I would just not take the trade at all. Does that kind of answer your question?
Yes, yes. So basically, by default, we should always go with the higher risk, right? The 2400.
Yes, that's why I call that like the normal
Okay,
risk, quote unquote. Yeah.
got it. Thank you. Thank you. You answered all my questions. Thank you.
Absolutely, man. You're from India? You're Indian?
Yes, yes,
Holy shit, man. I am half Indian too. My mom is from Shimla. She's Punjabi, man.
yes. I've seen that. I heard that in one of your videos.
Yeah. No, my mom's she's Indian and my dad is just some random white guy who lives in the country here in Texas, but yeah, half Indian. Namaste, my brother. Good questions.
Thank you.
Okay. All right. Next up, we have Martin Gvid. Go for it.
Hello. Hey guys. So I have a question. Last week, you sent out a couple opportunities connected with the USD pair, USD CAD, AUD USD. Do you take into consideration the geopolitical situation, especially connected with the USD? What's happening, the war close to the Iran. Fed may announce, I don't know, higher interest rates and so on. Do you think this is a really good pair to trade right now, especially if it's connected with USD?
So my simple answer to the question, do I take other let's say, analysis perspectives into context. So fundamental analysis, geopolitical context, economic news releases, um, risk on, risk off sentiment. Do I take any of those things into context outside of technical analysis, which for me is just basically support resistance? The answer is a resounding no. I take none of that other stuff into account. And if you like, I can give you an explanation.
Okay. Okay.
Okay.
Curious to hear that.
All right. Yeah. So here's the simple explanation. The simple explanation is because nothing is predictive. Nothing. And I mean nothing when trading is predictive. Nothing, 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 nothing. And even if there is the 0.0001% of something that is predictive, you and me, us idiots here on a Zoom call trying to learn how to trade on the retail side, not managing billions of dollars in a hedge fund, we're not gonna know what the fuck that is. So it's better to assume that nothing is predictive. Okay. So since nothing is predictive, what happens is we can go about trading in any way we want, and all we're really trying to do is say, okay, where do I buy, where do I sell, or a better question is when do I buy and when do I sell, and then how do I control risk? That is all we're doing, and then all we're trying to do is make a little more than we lose long term. So we're just trying to maximize winners a little bit more, and then when we lose, we're trying to lose a little bit less whenever we get it wrong. So you can do this in many ways, right? You and me can look at a chart, Martin, and we can say it's at a daily support. We'll just buy, put a stop below, put a target above. If it starts to break, we'll try to get out a little early or break even or small loss. And if it goes towards the profit, we'll try to hold it in most cases to the profit target. That's a very simple, basic retard way to do it because I'm not very smart. And Martin, you're kind of a dumbass too. We're both kind of retards here. So like we don't really know what the fuck we're doing. So we should probably just do it that way, even if we are smart, because it's just simpler and easier. So you can do that, or what you can do is you can do this really complicated fundamental analysis. You can look at the geopolitical events that are going on in the world. You can try to use this logic and mental gymnastics of like, the Iran war is going to cause this to happen to oil, and then people are going to move these assets into oil and gold, and then that's going to put pressure on the US dollar. And then the interest rates decision is going to come up, and the Fed's going to start talking, and then somebody's going to start yelling at someone, and it's going to cause this. And then you then get to the decision of, okay, well, what the fuck do we do? Do we buy or do we sell? Okay, let's say you decide we're going to buy. We think USD is going to go up. Okay, so we're going to buy. All right, that's great, bro. So where do you put your stop loss? Where do you put your profit target? How much are you going to risk on it? What the fuck do you do, right? You still have to figure those things out. And then visually on a chart as a trader who's long short, like you and me, right? We're getting into buys, getting into sells in a market that's volatile and has a lot of mean reversion, like the Forex market. When you're doing that, you have to have a way to structure risk. And the best way to do that is to visually look at the chart and say, I will buy or sell right here at this X random arbitrary location on the chart, which we just call, oh, it's at a support zone or resistance zone. And then what we have to do is we have to decide, what are we going to do if we fuck up and if we're wrong? Not if we fuck up, but what are we going to do if we happen to be wrong? Meaning if the trading opportunity happens to move against us. Well, we have a stop loss there in the case of emergencies. That'll get hit sometimes. Or we can try to cut the trade a little early by looking at price action and using intuition and discretion and shit like that. So we can minimize our losses, but then when we have a winner, we just leave it the fuck alone most of the time and let it kind of run towards the profit target. That is so much easier. And what's funny is that even if you use fundamental analysis and economic news analysis and all this other bullshit, I say bullshit, but if you use all these other like confounding variables and factors to influence your trading decisions, it just gets so complicated. And then you're still left with all of that narrative. You're still left with having to go back to the chart and decide, okay, now, real talk, where are we actually going to buy? Where are we actually going to put the stop? Where are we actually going to put the target? And how much are we going to risk? And what are we going to do if we get into the trade and it starts to go against us? That can all be done with just simple technical analysis. That is why I just don't use anything else. I don't use fundamental analysis or economic context or geopolitical events or anything. All I do is I just look at the chart. And you know what? Half the time I'm wrong, but that's cool because anybody who's using fundamental analysis and saying the US dollar is going to go up because of this, half the time they're going to be wrong because there are so many variables impacting the actual prices in something like the Forex market that you can't predict exactly what's going to happen. So it's 50-50 anyway. My way is just saying, okay, since it's 50-50 anyway, and we're just basically flipping a coin, let's just do the most simple, basic, rudimentary thing. And that to me has worked better than anything else for the past 8 years I've been profitably trading. Does all this make sense?
Yeah, sure. It makes sense, especially the risk reward ratio, analysis and make sure that you really don't lose your trousers, let's say, for this case. That definitely makes sense. For me, whenever I like to see what's happening around. So in case I would choose GBP and GPY versus USD, CAD, I would just throw away USD and I will throw everything into the GBP, JPY, because from my perspective, it's going to be a safer play instead of risking it with USD, especially right now. So that's all I wanted to discuss.
Cool. There's nothing wrong with that. Just take
Yeah.
whatever trading opportunities that present themselves that you think are viable, and then just make sure your risk tolerance is there and the risk structure is there for where your stop and target's at, and risk an amount you're comfortable with. But there's nothing wrong with what you're doing. It's good.
Thank you, Nick. That's all.
Absolutely, brother Martin. Good questions. All right, next up, we will move to Sienna. Go for it, Sienna. Oh, and just so you know, Sienna, if you're still here, oh, there you go.
Hello.
Yeah, go for it.
I'm so sorry. Would you prefer it if I had my camera on?
Mate, it's okay. I mean, whatever you want, mate. Right. To be fair, I'm not too bothered by it either way. No problem.
Cheers, mate. I'll just put a shrimp on the barbie, so I'll be back in a sec. No, I'm here. Right. So let me put it. I'll get a video on. Here we go. So, first of all, I just want to say thank you for just the enlightenment that I've had from you and from your videos. I'm not going to give you a full history sort of thing, but my son had a massive brain injury a couple of years ago, and so he lost the ability to do everything. So we're teaching him to do everything again, and so I've been essentially I was fortunate to do quite well in the stock market to basically make some money to leave them when I'm gone. And this is just one avenue in which I'm looking to allocate some money to trading. And so thank you just for the opportunity to potentially, make some money, and I hope I can do it as good as you. Now, anyway, so for me, it's just that 50% win rate. I'm just, you say it's, typically sort of 50-50, around about lose half, and it's just something that I'm not quite experiencing at the moment. And I think that's, given what your first question was, I think you may have sort of answered it. So I'll go through my thinking, which is essentially that the zones we draw do matter somewhat, in that, as he rightly said, sometimes you allocate 50k to some and 100k to others, and then you went to say on, for example, if we see prices bouncing off a zone repeatedly, however, there is another zone that sits above, and you're sitting there thinking, oh, could it be here or here? These are two quite major spaces, that's where essentially, rather than entering full risk on each one, that you might essentially add half the risk, whereas previously, I think before, I was just sort of going all in on each one and not defining any kind of quality setup. And I think that may be one of my downfalls. So you've already given the answer on that. What was the other thing? And the other thing is perhaps I just haven't been doing it long enough. I mean, for a 50% win rate to sort of emerge, how many trades would you say would sort of, before you'd start to think, I've done 10 trades, I can see that this is a strategy that has legs?
Yeah. So what I generally say in my YouTube videos when I'm making them is you need, in my opinion, the bare minimum, like 200 trading opportunities. And that's a lot. That's a whole lot, right? But you can get this pretty quickly in back testing by just putting 1-to-1 risk reward ratios and just letting it either move to TP or SL. And in the replay mode, you could do that in an afternoon, right? You get 200 trading opportunities in an afternoon, whether you're using support resistance on higher timeframes or whether you're just entering randomly on the chart. You're like, all right, it's 8 a.m. Let's buy, put a 50 pip stop, 50 pip target. Long term, is as you get more and more of those, it's going to get closer to that 50% mark. Sure, it may be like 48, maybe 52, something like that. But long term, once you get like to 200, 300, 400, 500 trades, it's going to sit right around 50% just because it's random. Like price goes up and down, you can't really predict it. If you only have like 10, 20, 30 trading opportunities, I wouldn't expect to have exactly a 50% win rate. You could have a 70% win rate. You could have a 30% win rate. I wouldn't draw much conclusion from a small amount of data. So one of the questions that came to mind when you were speaking is to ask you, how many trading opportunities do you think you have roughly so far?
I'd say I've probably done about 15 of yours in your type. There's a couple of other sort of little ways, testing different things and see what works and stuff like that. Yours is obviously by far the best. I'm not just saying that in terms of like just the simplicity is just is beautiful. And so yeah, I guess would it be like, for example, if you've got your 50k trades and your 100k, if it was truly random and you didn't differentiate between those higher quality, lower quality, I wonder what do you think that the win rate would be, not your win rate, sorry, your profitability would be the same or similar had you have put 100k on low quality trades?
In my experience, no. It would still be profitable, but just not as profitable as it is now. The account would just grow much slower, and I'd have to risk lower because the losing streaks would be higher because I wouldn't be able to capitalize when I get like a really good trading opportunity.
Okay, yeah. So perhaps, yeah, for me, yeah, I appreciate that. So an entry at perhaps deciding between the quality of trades is my step. I have seen success, the most success in this system. It's just that sort of, I'm trying to get that final little push to getting a bit more of a win rate, and it's not letting it go to take profit or cutting it early that I have a problem with. It's literally seeing the stats and going, hang on a minute, I want to see this build at some point, so yeah, I'll be looking into my my entries, I think, a bit better. I appreciate you answered that on the first question, so thank you.
Absolutely, mate. And you know what? One thing to point out is with only 15 trades of data, you run into something in statistics called random distribution. And so that's where like you're going to get random sets of like multiple wins and multiple losses in a row. If you take 200 trades, you are virtually guaranteed in statistics to get a 5 trade losing streak, meaning 5 consecutive full stop outs in a row if you're just letting it run to 1-to-1, right? So that could happen, or let's say that's statistically almost certain to happen in a 200 trade data set. However, that could still happen over the course of 15 trades. And that just happens to be the 15 trade period where you lost 5 trades in a row, but it's in the very beginning and you don't have all the extra cumulative data. Because by that same stroke of logic, you're also going to run into winning streaks of 5 trades in a row, like where you just win 5 trades, full TP, full risk, and you're just like, wow, I'm an amazing trader. And the next week comes along and you lose 3 trades in a row. So
So
it's just, yeah,
yeah,
it's something I would just keep in mind that like, there's nothing wrong with you. There's nothing wrong with anything. There's nothing wrong here. It's just random distribution.
brilliant. Thank you. And one final thing then. So do you remember doing that yourself when you first began? You thought, I've got my 1-to-1 ratio. I've tried all these things. Now I need 200 or so of them. And then you just pressed on and pressed on and pressed on.
I
Do you
didn't
recall
notice.
that?
I didn't notice that personally. What we noticed it is when me and my team used to do one-on-one coaching and how we had like a full program thing here at Mission Effects. We would work with clients one-on-one and we would notice that in the very beginning when they first start getting in 10, 15, 20, 30 trades, there wasn't really a lot of qualitative data. So what we would have them do is we'd have a spreadsheet for their live trades they're taking in real time on a demo account or small live account. And then we would have them do a back testing trading journal in a spreadsheet and they would document all of those. And as we saw the number started to get past 100, past 200, for the ones that were trading support resistance using 1-to-1 risk reward ratio, that's when we started to see the edge play out. So taking like 15, 20, 30, 40 trades, even 50 or even 100, honestly, like if I'm just being real,
Really
like
quite
100,
hard.
it's just one of those things where it's like you have to give it enough like trading opportunities. So we'd have people say like we'd be like, you need to take at least 10 high quality back test trades per day. So by the end of the month, right, 10 per day, the back testing, right, it takes like 15, 20 minutes to do that. They would have about 300 trades by the end of the month because 10 per day times 30 days in a month, you get 300 trades by the end of the month. We can look through the data and then we could start going through and fine tuning and adjusting things to help them then transition from like kind of that break even area into slightly profitable. And then that's where their edge comes in, which is your discretion, your intuition, how you manage trades that win or lose, how much you risk on trades, identifying high quality trading opportunities versus just, average quality ones, things like that. So it's just quite literally more time and experience. Isn't that funny?
Absolutely.
Right. Cheers, mate. You're a good bloke, mate. I got really good hopes for you.
Appreciate that, Nick. Thank you very much.
Yeah. See you, Sienna.
See
Oh, shit. I'm sorry. I muted you while you were talking. See you. Yes. All right. Mohsin, you are up next. There you are. You're right there.
Hi, Nick. Can you hear me?
I can hear you great, man.
Perfect. Just a couple of quick questions. The first one is, you're obviously trading candles in black and white. For us, rookies, we go dizzy looking at that because I've seen, obviously, you preach about the price bouncing when it reaches a zone, but I've seen you sometimes go into a buy or a sell very quickly as soon as price reaches. So my first question is, because we're used to seeing candles in red and green or red and black or whatever it is, how do you gauge a black and white candle when it's bouncing? Because it could be going up, it could be going against you before you decide to get in. How do you gauge that?
Absolutely, man. Super simple. This candle right here, let's see if you can notice. This is a daily chart, GBP CAD. Is this candle, if we were to paint it from like real price, is this going to be, let's say, a green bull candle or a red bear candle if I were to change the colors?
I would say red.
You would say red. So to understand this, you have to understand how candlestick works. So you have four parts of the candlestick, right? You've got the high, you've got the low, and then you have the open, and then you have the close. So where the previous candle closes, that's where the current candle opens. So all you got to do to determine whether or not it's a bull candle or a bear candle is you just have to look at where the current market price is relative to the previous candle's close. So if the previous candle right here on this sexy daily chart on GBP CAD that hit the take profit this morning, if the previous close was right there for that candle, and then this candle's price is currently above that, what color would this candle be if green is bull and red is bear?
It would be green.
It would be green. Ding, 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 ding. Gold star for you, Mohsin. You win. You are the winner. So yes.
Okay.
So that's how you determine. Yeah.
Right. And then I've seen you sometimes get into a buy or a sell very quickly as soon as it reaches, because you talk about in your videos that I will look at price action, but at some point you're getting in very quickly and at some point you're letting it bounce. So what makes you determine when to get in so quickly and sometimes to wait?
Okay. So the simple answer has to be contingent upon exactly what you mean whenever you use the word quote unquote quickly. And I swear to God, bro, I'm not being pedantic. I'm not being semantic. I'm actually this is a legitimate concern, right? So by quickly, if you mean like the second I get the trading view alert, then I enter, that almost never happens. If you mean by not quickly, you mean let's wait for some arbitrary number like 3 1 hour candles not breaking the zone before we enter, then it's not always that either, right? So it is a combination of looking at price action. One price gets into a zone, and that's usually on like the 1 hour, the 4 hour. Right now, I'm just using the daily and 1 hour basically. So price gets into the zone. I then go to the 1 hour, and I just want to make sure that the candles are not huge and like immediately breaking through the zone. The only thing, like the only reason I don't enter immediately, quote unquote, at most zones most of the time is because I'm trying to avoid getting stopped out instantly on like a bull run that just completely like smashes above a resistance zone, or a bear run where there's huge bear candles stampeding down into a support zone and it's just instantly going to smash through and break through. When I start seeing very big candles like that, particularly on the lower time frames, like 1 hour, like big bear candles, like just plummeting into a support zone, that is where we'll get a little bit more skeptical of entering immediately and wait just to see if price doesn't break the zone. The only reason we do this bullshit, which is called quote unquote waiting for rejection, the only reason we do that is just because you're just trying to ensure that price at least doesn't start breaking the zone immediately. And you can avoid that a good chunk of the time by just not entering quote unquote instantly when price gets to a zone. Now, by quickly, sometimes I enter the trade quickly and sometimes I don't. The word is far too subjective for us to define. However, what I will say as a factual statement is that generally speaking, most of the time, I don't enter a trade the second it gets into the zone. I wait to look at the candles. I see if they're relatively smaller or if they're huge bull or bear candles. I'll generally leave it alone and wait. And if we're getting into a zone and price appears as though, in my personal subjective humble opinion, that it's not going to be breaking the zone, then that is where I will enter. This is a big reason why I don't use limit orders, and instead I use trading view alerts. That way, whenever I get the trading view alert, I go to the pair on MetaTrader 5 or trading view, I guess. And then I look at the 1 hour and I try to look at what the candlesticks are doing to see, okay, does this look like it's instantly about to shatter through this zone? Or does it look like it might be reasonable that it might bounce here? Then after that, I will decide to enter. So remember, if I was entering instantly or quote unquote quickly, I would just use limit orders. I'd put a sell limit at a zone, price gets there, automatically enters me. I don't do that because I like to avoid not getting stopped out immediately, an immediate loss when price instantly breaks through a zone, because I just blindly entered without pausing and taking a look at it first. to see if price was kind of pausing at the zone before then entering. There's no specific candlestick pattern, there's no specific formation, and there's no black and whites. It's just a matter of wanting to look to make sure price isn't smashing through a zone immediately before entering. Does that make sense?
Yes, it makes sense. And Nick, obviously you're in the business since 10 years. And like you said, in many of the videos, you've tried almost so many things, Fibonacci, SMC, you name it. For example, today we are in one trade, GBP AUD, which is an inverse head and shoulders, which is literally about to break out. And do those kind of confluences also play a factor in your mind that, yeah, this is another confidence level measure I have because it reached the zone, plus it's an inverse head and shoulders, and it looks like it's about to go in the direction where it should go.
It's funny. I didn't even notice this was in Head and Shoulders. I didn't even notice. But like, yeah, I mean, it's like we've got the left shoulder, then we've got the head,
Yep.
guys, and we've got the right shoulder. Um, these are patterns you can find anywhere in the chart, right? You can use all sorts of mental gymnastics and be like, look, this is a Head and Shoulders inverted because that's the left shoulder, this is the head, and then this is the right
Correct.
shoulder, and then now look, see, we went up. The Head and Shoulders pattern works. All I'm really looking for is for price to get into the zone and then to see some sort of pause or rejection, whether it's like that, whether it's like this, where it comes up into the zone, then it quickly starts coming back in, and then I
Yes.
can enter after that. You're gonna see shit happen. Like you're gonna see patterns like present themselves because
Yes.
based on what time frames you go to and everything, you're gonna start noticing, well, on the 1 hour, it's in an uptrend, but on the daily, it's a bearish engulfing. But on the 4 hour, it's a head and shoulders. Oh, what the fuck do we do? I don't know. And on the 5 minute, it's in a range. There's all this shit. So that's why I just keep it retardedly simple because I am in
Yes.
fact a fucking idiot. Most of you on this call are fucking idiots. Perfectly fine. We're all a bunch of fucking idiots,
Yes.
but we can still be profitable. Anthony's excited. He's like, yeah, I'm an idiot. Um, yes, but the cool thing is we can still be profitable by keeping it simple. So that's why when it gets into things like major support resistance zones in the daily, you can see like from what I did here on GBP AUD that we were just talking about, you guys saw this for weeks. I had an alert here at this zone. It got to the zone. I went to the 1 hour. I waited to see if it was rejecting, which I think my entry was actually like down here on that little candle, like a small little candle rejecting right there.
Yeah.
Then I think it went
Yes.
against me a little bit, and then looks like it's coming back into a lot of profit so far. But I'm not doing anything magical or crazy. It's price goes into a daily support resistance zone, and then I'll glance down at the 4 hour or the 1 hour, in this case, the 1 hour, and I'll just make sure it's not breaking through the zone instantly. The things we don't want to see is we don't want to see something like this, for example. If I were to just take the replay tool here and go and just clear out everything beyond this right here, this is something I would not be buying just because price gets there and there's these huge bearish candles. I would be waiting for price to like pop up a little bit first. So then you get that on the next candle, you have price pop up, but then the problem is for entering there, now it's outside of the zone. So then you'd have to set an alert back at the zone, wait for it to just come in a little bit. That way you can get a better risk structure, right? Stop loss can go below, target above, but now you've got a better entry. And then if
Yep.
that happens, then you can enter. And in this case, it wouldn't have happened. It would have run off without you, and that's okay. Not entering on big candles like this, that will save you a good chunk of the time. And the other fucking hilarious part about it, which is trading, which is right after that,
Yep.
right after that happened, you had this down here, in which price came into a support zone, and then it paused, right? Literally got there to the low, broke a little bit below it, but still started pausing with all these little rejection candles. And then this probably would have been a trade I would have entered. And then even after you buy there, what would have ended up happening is it went sideways for a couple candles, then it started breaking below. Then this one would have probably resulted in like a partial loss. Because if you entered there, if the stop is way the fuck down here or something, that would have been maybe a third or halfway to the stop. And then good thing too, because this one would not have worked out, would have went to the stop loss. But I generally just wait for price to kind of get to a zone, pause for a little bit, even if that just means me going in and checking, and it just takes like 5 minutes. Like, so it's not always this crazy song and dance and looking at all these candlestick patterns and everything. It's basically just going in, seeing, making sure it's not breaking the zone instantly. And then if it looks like it's not going to smash through the zone immediately, I'll buy or sell at support or resistance.
Thank you. One last question. I hate to ask you this question, but you are the guru, but who was your guru?
I never really learned from any one person in particular. I watched a lot of YouTube videos. I bought a few courses. I learned a lot from like blogs and stuff like Reddit. I learned a lot from Reddit. I learned a lot of stuff from mainly YouTube. Like, yeah, so I didn't have any one particular person that I kind of guruified. I wish I would have. I wish I would have found someone who like slapped me in the face, like came to my house and slapped me in the face and said, "Hey, dumb fuck, start trading more simple." And then that wouldn't have taken me so long to get profitable, and I wouldn't have so much imposter syndrome and so much deep-rooted childhood insecurities as a result of not being hugged by my mother enough when I was small. But aside from all that, my mommy issues, like, yeah, I didn't have a guru. I wish I would have had someone that I could have like that could have really helped me, but no, I unfortunately didn't have that. So that's why it took me years.
Yeah, super story. Thank you, Nick. Appreciate it.
Absolutely, Mohsin. Salam alaikum, habibi.
Yep.
All right. Nath or Nathan, your time has come. The time has come, my brother with a beard. Make sure you unmute yourself.
Yes, Nick, you good?
Yep.
So, basically, I just wanted a little bit of advice. When you come into a trade and it starts going against you a little bit, how exactly are you knowing to get out? Because there's a few times I've been following your trades and it's gone so far. And in my mind, I was just waiting for you to be like, we're getting out, I'm calling it here. But then it started coming back. And then there's been times where I've been in a trade and I did message you about this the other day. And you said you did it when you started. And I'll start like playing these mental games where I'm like, I know it's going to go down. I know it's going to, when it starts going against you, say if I'm in the sell, it starts going up. In my mind, I start convincing myself like it's going to go down, it's going to go down. I'll maybe move the stop loss or put another entry. And then before you know it, it's escalating.
Yeah, so this is a question that gets into so much complexity and nuance that it's hard to explain without just simply just saying like, oh, it's just experience, mate. It's just seeing it over and over again. However, there are a couple things I think I can add that would make it a little bit more useful of a response. So the first thing is I want to point out that the decision as to whether or not to get out of a losing trade early, it is not a black or white decision. It kind of moves on a spectrum, right? So there's a degree of like, how fucked is this trade likely to be? So let me give you an example. We'll just use like simple, we're going to use the squiggly lines. Okay. This is the super professional, high end, crazy high production quality Nick Sean live session, the squiggly lines. Okay. So let's say this right here was a previous zone and it was a major resistance zone. And we think that price might bounce down from here again. So we do everything we're supposed to do. We get the little thing drawn up here on the chart. We're going to be selling there at the zone. We put an entry there at the zone. We put a stop loss above the zone and a target below. It might look something like that. So then it's like, all right, now it's the waiting game. Now we got to see what happens. So if price starts going above the zone slightly, most of the time I generally won't close. If it starts going even more above the zone, gently, meaning like with relatively small candles, there's no big crazy candles, generally I'll hold on to it. If it starts coming back into the zone, touches the entry, generally I'll hold on to it because that might just be a fake out. If we start getting here in the zone and then we fail to break right back below into profit, but we start to bounce, that's where I'm going to start getting suspicious. And then if we like try to go back again, but then we bounce again, I get more suspicious. And then if it starts doing to the point where it's floating around this high and it's not falling and it's looking like it's going to break out, then I'll make the decision, okay, I'm going to close the trade there. So it's a context, right? Like the trade is okay right here, slightly weird right there, comes back, touches here, looks fine, but then it starts to bounce. That gets slightly more suspicious, goes up to the previous high, that's suspicious, doesn't drop immediately, that's suspicious. And then it gets to the point where you're like, all right, fuck it, it's not working. It's time to close the trade and exit. That's one example of a trade that if it starts going sideways, that I would exit early. Another example is when I get into a trade and it's either ranging at the zone or it starts going into profit, but then instantly we see a huge quick spike up past the zone. In those cases, what that tells me is that there's for whatever reason, there's a lot of orders, there's a lot of liquidity, a lot of momentum, a lot of volume coming into the market, and it would probably be a better decision to just liquidate the position right there. Now, big caveat here, huge, crazy nuance. The nuance is that the only way you're actually going to get good at doing this consistently and predictably over time is watching this happen hundreds of times. So you can get that experience through live forward testing, trading on a demo account, back testing, following my live trades, following my Telegram, scrolling through all the previous trades in the Discord server that I've called out as I've been growing this account from 350K to almost 1 million. Seeing it over and over and over, that's what's going to give you that. It's going to present you with that feeling, that intuition and discretion you get that is very difficult to put into words. There's no way to put it into words. There's no way to say like, Nick, you said you close if it breaks the zone, but mate, over here it broke the zone, but you didn't close. And then it's like there's no way for me to like verbally put it into words because it is all based on intuition and my brain subconsciously recognizing things that are happening on the chart that are so nuanced and so detail oriented that I'm not even able to decode it and put it into words in my conscious mind. It's like riding a bike, right? You know how to ride a bike and you know how to lean and turn the handlebars. But if I were to ask you, like, Nath, like, how do you know exactly to turn the handlebars at 27 degrees? And then how do you know to lean slightly to the right at 13 degrees? And then how do you know to keep that exact speed you were going, which was 13.8 kilometers per hour, to make sure that you weren't going to fall? You don't fucking know, but it feels right when you're on the bike. You lean, you kind of feel it out. And then through all your experience riding a bike, that presents itself in the form of like, yeah, I do this. But if you were to try to put it into words, it might be kind of difficult to put it into words like quantitatively and scientifically. Trading is the same way. So this is just to say, the more experience you get, the more you see this over and over, you will start to be able to develop that skill of manually deciding, should I get the fuck out of this trade here or should I hold it? And that is my answer. What do you think, man?
Yeah. A part where I come into trouble is there, like when you say it starts spiking up, I start playing these mental games with myself where I start saying things like, maybe it's just the liquidity grab. It's just going to, it's made some higher highs and then it starts coming down, but it's just going to spike up quickly to take people's stop losses out. And then it's going to get, and that's where I start fumbling. It just starts spiraling from there for me.
Absolutely. There's a way you can get around this. Would you like to know?
Yeah.
20 quid, mate. 20 quid. All right. So here's what it is. What you can do is make sure you're doing this on a demo account or a tiny live account that you don't care about, risking like 5 quid per trade or something stupid. I would do this on a demo account though. Get into a trade, and the moment you start feeling weird about it at all, like you're like, oh, it's breaking above. What do I do? Like the moment that you are no longer in a this is a good trade mindset, just instantly close it. Leave it alone. Watch what happens. If it continues to go up, okay, cool, you avoided a bad trade. If it starts going back down and then you think, okay, now this looks like it's going into profit, then you can just simply re-enter that same trade you were in, right? Entry is going to be around the same spot, put the stop loss around the same spot it was, risk the same dollar amount, and then get that in. And then the moment you feel like that trade is fucking up and not working out, immediately close it. And then if it goes against you, that you leave it alone, don't re-enter it. But if it starts going back and it looks like it's going to go into profit, then re-enter it again. By doing this over and over, what this is going to do is it's going to teach your brain what actually ends up happening once the decision is made. But you're doing that in a safe environment, which is on a demo account. So that way you're not actually putting real money on the line, but you're still gaining that experience from watching it happen over and over again. Did what I just say make sense?
Yeah.
Oh yeah? Oh yeah, it did, mate? You cheeky little muggle, mate. Why don't you explain it to me then, mate? So explain to me what I just said.
So what you're saying is basically if I just open a demo account or a small enough account that it don't really matter too much. And then because I'll have less emotional attachment to that account sort of thing, it'll be a lot easier for me just to say, well, pull the plug, it's not working, or this is feeling weird. Watch what happens, and it will just end up giving me more and more experience. So in the future, hopefully, on the real account, I'll be able to go in the past and draw from them experiences.
Mate, to be fair, you're quite a sharp bloke. I couldn't have said it better myself, mate. Wow.
I thought he was going to say, no, you dumbasses.
No, dumb fuck. No, yeah, that's it. So yeah, you get the vibe. But remember, the point of this in doing that I just described to you is to teach yourself through experience to, like, the moment you think it's gonna fuck up, just close it. Okay, cool. Now you don't have to think about it. But and that the only time you do that is the moment your brain shifts from, yeah, this still looks fine, and then it shifts to something like, actually, I don't know anymore. The moment that happens, just close it. That will prevent you from getting into this decision fatigue and like kind of fighting with yourself on like, oh, do I close it here? What would Nick do? Is Nick doing this? I need to set alerts on my Discord, even though it's fucking 4 a.m. here, and then Nick's gonna call out a trade at like 10 p.m. Like, oh, I'm closing, and then I got to wake up at 4 a.m.
You've done that to me the other day, yeah.
Yeah.
GBP USD, and then you went to, I think it was NZJPY, I think,
yeah.
and that one went straight to TP, and I woke up to GP USD hitting the stop loss. I was like, no.
Right. Next time I call a trade, and it's going to be late at night, I'm just going to bring some fish and chips to your house there, and we're just going to have some fish and chips and just take a trade together. I'm going to put it on your terminal for you. I'm going to take the trade for you, mate. Okay, cool.
Oh,
Well, yeah,
sounds
try doing that on the demo account, though. I think that will be really helpful in developing that experience.
nice one. Thank you.
Absolutely. Cheers, man. See ya. All right, my friend Rasmus. It's you and me now, man.
Oh yeah, I like that you make everything so simple. You're literally the only trading guru that actually makes stuff simple, and I love it. I love to follow it live and actually, because if I follow your trades live for a long enough time, I will start to think more and more like you. And I guess it's the same for everyone here. Like when you actually show it, then of course you can go and look at the chart yourself and have your own thinking mind, but what's the reason for doing that when you can actually go and look at Nick and see when you enter the trade and when you exit the trades? And then after a while, I've been only in this group now for a month, but I think like if I were to look at all your trades, which I'm doing now, if I do that for a year or two, then I will probably start to think more and more like you. So anyway, my question was, do you use funded accounts, or do you have any experience with funded accounts?
Do I use funded accounts? The answer is no. Do I have any experience with funded accounts? The answer is yes.
Bad experience, good experience.
Yeah, generally for me, so for two reasons. Two reasons I don't personally use them or like them. Number one, a lot of the trading criteria is so fucking weird. So like meaning like it prevents me from being able to trade naturally in a normal way because of their stringent criteria between what you can and can't do. So there's certain like guidelines and rules you have to follow, and then if you break them, then you lose your account, or if you go past a certain drawdown level, or if you have a trailing drawdown, which is even stupider, then you could have a winning streak, but then you like wipe out your profits on a losing streak, but then it wipes out your account, even though your account didn't even get below the starting balance because they had the trailing drawdown. And I know not everyone's like that, but a lot of the prop firms are like that. And it's just really frustrated. So the first thing is the rules. The second thing is for what I'm doing, it doesn't make sense at the amount of capital I'm trading to use a prop firm just for the amount of capital alone that I have. But then on top of that, using the amount of capital I have plus going through their rules and criteria you have to follow to be able to trade profitably with them, it's just a model that doesn't make sense for me personally. Do I recommend anyone else use them? No, I don't, at least not in the beginning. And the reason being is because if you look at the statistics and the data, the biggest prop firm, which at the time was My Forex Funds in 2023, they reported that only 0.25% of their traders actually receive payouts. And they didn't say how many of them receive payouts that exceeds the amount of money in challenge fees they paid to join. So there are people making money, but it's about 0.25% of people. So for those of you listening, that is 1/4 of 1% of people who buy a My Forex Fund prop firm challenge in 2023, or I think 2022 to 2023. Only 1/4 of 1% of people actually receive a payout. Some of them make a lot. Some of them may not even cover the amount they paid in challenge fees to try to go through all the bullshit to get the damn account in the first place. Whenever you look at the actual statistics in trading, Forex.com, one of the biggest regulated brokers here in the United States, reports that 70% of their clients lose money and 30% of their traders do not lose money. Now, what does that mean? Does that mean break even? It cannot mean that they're losing money because it's literally 30% don't lose money. So they're either 30% of people trading with Forex.com are either breaking even, which is probably most of them, or making money slightly. If we just round that 30% down to even like something like 5%, right? So let's say only 5% of people make money, 95% of people break even or do not make money. That 5%, when you do it in a multiple of like 1/4 of a percent to 5%, right? You're 20 times more likely, or 25, whatever it is, 20 to 30 times more likely to make money trading just using your own capital as compared to using a funded account. I will recognize and grant that not all statistics are the exact same for funded accounts. Some funded accounts might have a payout rate of maybe 1% of traders or 0.5% of traders. And a lot of them probably still do have that 1/4 of a percent of traders receive a payout. But because the percentage rate of you failing trading on a funded account is statistically higher than you failing trading on your own capital in your own account, that is why I believe that just trading your own capital with any dollar amount is a better idea than what I would call for most people throwing away their money on funded accounts. So that is my explanation why. You are statistically more likely to make money trading your own capital at any dollar amount than you are trading with a funded account in general.
I have the same experience as you as well. Like the trailing stop, and there are so many rules that probably are built for you to actually lose. But I was just wondering, like, because you've been doing this for so long, in order to get to your level, was it your own capital or was it funded capital in the beginning and then you throw it into your own?
It was all my own capital.
Good. That's a good answer.
That's it. I managed some money for my stepdad at one point, way back, because you can, like, in the US, you don't need a license to manage capital for like friends and family up to, I think it's like 5 people. I may be wrong here. Y'all can go check the law, what the law says. But in the US, I think it's like 5 people or some sort of small amount of people, as long as they're friends and family and you're not soliciting, you can trade for them and you don't need a license. So, but you can't solicit for that. You can't. That's why I don't do any asset management or copy trading or anything like that. Like, it's legal for me to just start a Discord server and just say, hey, I'm going to post all my trades here. And if you want to have access to the Discord server, you can just pay me. And then you can have access to basically what is a trading journal for me that I share my trades in real time. But it's illegal to do a bunch
One
of
more question. I was wondering, you said that you started with $8,000, but I assume that you were continuing to adding onto that account. Did you do that, or did you just start with 8,000 and then grow that only by itself?
Second.
Det tror jag. Ja.
Okay. Did I start with 8,000? I didn't start with 8,000. That's a lie. That's a big lie. I started with $8,300. That's what.
Okay.
Big difference.
Right. Because that's kind of the same capital I'm at right now, starting out. But my plan is to continue to just add onto the account as I make money in my job. But yeah.
Yeah, so I started with 8,000, but what I would do with that, because I was using Trader's Way, this was back in like 28, like I used them since 2016, but this was like maybe like mid 2017, towards the end of 2017 and then 2018. I was using Trader's Way and CoinEx. So I would have a Trader's Way account and I put $8,000 in it, and I had 2 accounts in Trader's Way. One of them was the account I traded on, and then the other one was like, it acted like a bank account where the money would sit, but I wouldn't trade on it. So I bought Bitcoin and sent it to Trader's Way. And then with Trader's Way, I had like, it was like 88,264 in the first account. I then transferred $1,000 into the other account, and then I would trade that smaller account of 1,000. And what I would do is I would try to double it. And when I double it, I would withdraw the profits to the account. And sometimes it wouldn't double. Sometimes I'd grow it from 1,000 to like 1,500, and I'd just withdraw the $500 profit. But I would try to double it, because then I get my starting balance back, and then I can keep trading the account. So then what I would do is I would try to grow it from, like, the account started, I would leave 2K or 3K in there. I would try to grow it to 4,000 or 6,000. Sometimes that would take me a month. Sometimes it would take me 2 or 3 months. Sometimes it'd take me a week. It just kind of depended on what the market was doing. And then as I would do that, I would continue to just withdraw the profits back into the main account. At that time, I had a trading approach that did not function with stop losses. It's nothing like what I'm doing now. I was like using RSI scalping on the lower time frames and this and that. And it worked back then with those market conditions and the low broker fees and low spreads, and probably from a number of other variables that probably don't exist today. But it worked back then. But the problem is every now and then I would blow an account. So I couldn't keep all my capital in one account because the account was going to blow at some point. This was fine because I would withdraw plenty of profits in the meantime, right? So I'd double the account, double the account, double the account. But then when I would blow the account every now and then, right, I would just lose what was in that small account, and then I could refund it from the profits that I had already internal transferred to the other account. And what I did is I kept doing that, and I continued to grow the account that way. And I just kept doing this over and over and over and over and over to the point I'm at now, where now I'm risking like 50 to 100,000 per trade.
Yeah. So in other words, it's good to withdraw sometimes, or when you double it, so you don't, because if I were to do what I was saying, then I could possibly blow the whole account that I built up during many years, So,
yeah, that would be a stupid, dumbass thing to do. So continue to structure risk like you're doing right now. Then you won't lose it all.
It's just good to hear. Thanks.
Cool. No problem. Good questions, man. All right. I don't see anyone else's hands raised for questions. So if anybody has a question, you can either raise your hand and then I'll call on you and then we can talk, or you can just unmute your microphone and talk, since we don't have anyone waiting in the queue. I will wait. Nuno, no questions, Nuno. Robert, no questions from you either, brother?
Yes,
There
I
we go.
did. I had to find my mute button. Um, I just wanted to know, in terms of drawing your zones and fine tuning your exact entry points, can you speak a little bit more to how you narrow it down to a single point of alert in on a trading view chart?
Yes, of course. So what I'll do is I'll explain it in simple words and then I'll show you on the chart. Fair enough?
Thank you.
All right. So the first thing I'll do is I will construct the zones based on like the daily and weekly charts. Mostly it's daily, but weekly still works fine too. But for me, I just use daily. What I'll do is I'll look at where the candles, where the extreme highs and lows are of the candle. So, and this is relative. So if it's a resistance, I'll be looking at where the extreme high is. And then what I'll be looking at is where the candle closed at. So just those 2 points. For support, it's just vice versa. Where's the most extreme low of a candle that went into an area you think price was bouncing at, which is support? Where was the extreme low, and then where was the close of the candles? And then what I'll do is I'll then draw a zone to try to encapsulate all the extreme highs and lows as well as the closures. And that is what creates the zone. Then what do? I just set an alert halfway into the zone. And then when price gets there, that's when a trade is good enough to enter. I find if I set my alert at the very beginning of the zone when price first gets into it, a lot of the times price is going to go a little bit deeper. And then you end up just getting into drawdown for like zero fucking reason. And your take profit has to be a little bit further because your stop loss is further. If I wait for entries at the zones at the very tip point, sometimes I will do that, right? Forgive me for getting perfect entries sometimes, but sometimes I'll do that just depending on the context. But most of the time I find that if I set my alert about halfway into the zone I've drawn, that's good enough, right? You're not entering too early, but you're not trying to wait for that picture perfect entry down to the exact pip where a price most of the time is just not going to go that far. It's going to get about halfway in the zone, maybe go sideways, might have a liquidity spike there, but a lot of the times it won't, and it'll just bounce away without you. And then you end up missing trades, just like I missed that huge Euro GBP trade like a week or two ago because it didn't come all the way into the zone 3 pips away from where my fucking entry was or would have been. So
yeah.
So I've just explained how it works. Now we'll go to the charts and draw it. Fair enough?
Mm-hmm.
All right. Pick a pair, any pair. Pick a card.
I don't know. Let's go with Euro JPY.
Euro JPY, my friend. You have chosen wisely. Let's go. Where the fuck is Euro JPY at? Where is this? Y'all, am I blind? Do I not have?
There it is. It's about 5th up from the bottom, I think.
Oh shit. I don't know. I need to finish my coffee or some shit. Okay, Euro JPY. So let's clear all the drawings. Let's remove all the alerts and let's go back to a random point in time and find some fun zones. So we're gonna go to a random bar. All right, here's the random bar. Cool. So let's find a zone where we can draw. So there's not a lot right here close to current market price. I think I see one of them. Okay, cool. I've got one. Support zone. Right here. Now, the reason I drew it this way, remember what I said. Since it's a support, I'm going to look at where the most extreme low went, meaning all the way down here. Meaning you're not going to see me doing some shit like this where I'm drawing a zone like that and there's candles like spiking through the zone. The only time that'll happen is if like the zone has been tested 3, 4, 5 times and that only happened once where it went below the zone. And even then, I'm still going to put my stop past it, right? So I'm using the most extreme low right there. And then I go, and I don't want to do this either, right? Because a lot of the times price won't get all the way up there. Price stopped up here before coming down, and then it also stopped up here as well. So we're still bouncing like further up. So then after I've got the most extreme low, it's that support, I'll then just extend the zone up to where all the closures are. I'm sorry. Yeah. Sorry. Closures. That's what it was. And then what I'll do is I'll set an alert about halfway into the zone. In this case, it's only going to let me draw a horizontal line. We'll just pretend that's an alert. And then when price gets into there, that is when a trade is viable to take, right? Contingent upon price action and not breaking the zone immediately. And then the trade would just look something like that, right? Well, maybe like that. All right. Does this make sense? Is your microphone? I don't know if your microphone is muted.
My microphone was on mute.
Okay.
Yeah, but that looks appropriate. Like that looks. I see what you mean.
Sweet. And then the other alternative would be up here at resistance. We've got that resistance zone right there. Would that be a good way to draw it?
No, absolutely not.
All right. What
So
about what about this right here? Here we go. Yeah.
Uh,
Good. Good. Yeah.
no,
Good.
I don't like that. It's too many,
Well,
too many
bullshit.
candles passing through.
Bullshit. Okay. What about this right here?
It's better. Yeah, it encapsulates most of what you're interested in. So I would say yes, that's appropriate.
Yeah, I would too. Something like that, right? Maybe a little bit lower, but like that alert halfway into the zone, you're going to be getting your alerts right around these highs, maybe a little bit lower, just because we had some candlesticks like that wick there and then these wicks over here. But yeah, I mean, this is more or less like fine, right? So then the idea would be like price comes into the zone, then we sell. And if it starts bouncing, we'll hold it. And if it tries to break, then we'll try to get the fuck out a little earlier. So that is how I do it. Now, this being said, was this actually helpful? Did this actually help you like figure out how to draw zones a little bit more sexy?
Yeah, that's a little better. And then I guess the next part is just being able to commit to when where you would draw the stop and the target.
Absolutely. So where to commit to? What does that mean?
Meaning, what's the basis? Do you first look for a target and then do one-to-one, or do you look for your stop and then do one-to-one?
The stop comes first. So for example, on GBP AUD right now, my entries here at this zone, my super scientific championship of the world strategy for setting the stop loss is like this. Don't set it too close, but don't set it too far. So if it, yeah, like that's it. So if it's close, right? And we're not talking about in terms of pips, we're just talking about visually on the chart. If it's really fucking close to the zone, right? Price could like just spike above and stop you out, and that's annoying. But if you're setting your stop all the way up here, I'm like, all right, bro, you could probably figure out how to get out of the trade a lot sooner than that. And then your take profit has to be all the way down here at 1-to-1. That's just not very viable. So what I do is I'll set it above the zone where it's far enough out where if it starts to break above, it gives me a little bit of room to be able to manage it early and like close it. And then the 1-to-1 profit target doesn't have to be crazy either. So my trade is what? Something like that, right? Basically.
Okay. So you are still looking for a practical target, which might be below that candle.
Just what? So I enter at the zone, I put a stop loss, and then after that, I just drag the profit target to wherever 1-to-1 happens to be.
Okay.
That's how I do it.
Okay. All right.
Sweet, man. Good stuff.
Thank you.
Absolutely. All righty, my friends. We got some good questions today. I don't see anyone's hands raised. So now, before we hop off, this is your final chance. It's your final chance to get yelled at by Nick Sean himself. If you got a question, you can just unmute yourself, or you can raise your hand like Daniel did. Daniel, go for it.
Hey, Nick, sorry, just a quick question. I still have a trade open on was a GVP CAD.
Ah,
I couldn't it didn't take the take profit. We recommend it's like a 50% of the target. I put the take profit a little bit lower than what you had it. Will you recommend me to close it right now? I was thinking of just holding it until the take profit because still like halfway to the profit. So
yeah. So just because we're recording this, I am not going to tell you what to do because that would be financial advice, my friend. However,
yeah.
However, if I looked at my chart and I was still in GBP CAD, I would get the fuck out right now because it's already reached the profit target and it's going back up towards the entry really quickly. That's just what I would personally do, not giving you any advice.
Amazing. Thank you so much.
Absolutely,
That
brother.
did it.
And to be fair to Daniel, y'all, like one of my TPs didn't fill for GBP CAD. So when I woke up this morning and saw that, I had to manually close it. And then of course I called that closure in Discord and said, yo, hey, one of them hit, one of them didn't. I guess spreads didn't go all the way down there and hit it, but I did call it the manually closure at the moment I closed it. So, but you know, some of
Yeah.
us, yeah, we got
Sorry. Actually, something interesting happened in that trade. Like on Sunday when the market just opened, it was like a huge spread, which like it actually like took my take my profit, but it didn't close it. So that is actually normal, right? I mean, with spreads and those kind of things, I'm not very familiar with, but I'm still getting to it. So I mean,
yeah, spreads and gaps are normal over the weekend whenever the market opens on a Sunday night or Monday morning.
yeah, cool.
It's normal. Dude, my GBP AUD trade opened fucking up here whenever it was open. And it's not even, it doesn't even show that price was there on the chart, but the gap opened up there, and then the liquidity provider will update the data to the broker or the charting platform, and then they'll just magically show it was down here, and that never existed. But yeah, mine opened up here, then the gap quickly filled, and then the quotes and charts got updated. But yeah, that's normal. It's another reason I use wide stops. Like some people are like, there's no need to use such a wide stop, Nick, when you can just put the stop loss just on the other side of the zone. What's the point of using a wide stop? And I'm like, okay, bro, you go try to use tight stops on the other sides of zones in 1-to-5 risk reward ratios and just let it play out and show me what your stats are. Because I show my stats. A lot of the people trying to give me fucking advice saying I should use higher risk reward ratios, they can't even show me what's working for them because they're like, my trading strategy is private. I would never teach anyone because I don't want the banks and the market makers to learn what I'm doing and then be able to steal my strategy, and I have edge deterioration for what's happening with my strat. And I'm like, yeah, fuck you. You're probably broke and can't trade. So fine. I'll keep using my 1-to-1s and you can keep pretending to trade.
True.
All right, my
Oh,
brother.
Yeah, cool. By the way, I heard in one of your videos that you might will be going to Aspen. I do work in Aspen. If you wanna I work in a restaurant, Aquilina, if you wanna pass by, I can just buy you a drink, of course. I mean, you don't have to, of course, but
Sweet,
just
man. Do you live in Snowmass or Glenwood or where?
Glenwood, yeah.
Okay, cool. Yeah, we're gonna go. My family has a home in Vail, so we'll probably make the loop of all the mountains and shit. We didn't go to Aspen this past weekend. Bonnie and I had some shit to do here in Fort Worth, and now she's not feeling well, which is kind of fucked because I don't know.
Oh,
But
sorry for
we'll probably go there. But yeah, shoot me a message in Discord. That way I know like you're the person that works in Aspen. Just say like, hey Nick, it's Daniel. I work in Aspen. Just let me know. And then yeah, me and Bonnie will stop by and we'll come say hi and stuff. I'll buy you a drink while you're at work, man. We'll get drunk while you're at work, dude.
Sounds great.
All right, brother. Sounds good. I appreciate that.
Appreciate it. Thank you.
Sweet. Aspen trip and free drinks. Man, my clients, you guys are too good to me. You guys spoil me. This is so what do I even do for you guys? Johnny, you are up next. Go for it.
Hey Nick, how you doing, brother?
Amazing, man.
Question. I know you trade on a higher time frame, but if you were to look at a lower time frame, what type of validation would you be trying to get from looking at a lower time frame?
The lower time frames as in like 1 hour, or are you talking even
Yeah,
less?
let me 1 hour, 15 minutes. Because I know, are you looking to say a 1 hour or 4 hour candle? Would you look at the lower time frame to see how that candle is broken up as far as which direction it's moving in?
Yeah, basically what I do is I use the higher time frames, as you know, for just the major zones. I'm just waiting for price to get to one of those areas to even consider entering a trade. Then what I'll do is I'll go to something like the 4 hour or 1 hour, and then I'll just look at that candle, but just because it breaks the candle up into like more data. If you're looking on the daily, you can use that, but you have to wait for the candle to close in the daily to get that data. You can get that data a little bit more expediently by just using something like the 1 hour, because then you can start seeing a candle bouncing away from the zone like immediately, like within that first 1 hour candle. And then when that happens, then you can make the decision to be able to get into a trade that could be at a more optimal entry, because you just basically, right, it goes into a resistance zone in the daily. You go to the 1 hour, you see a bearish wick or you see a bear candle dropping away from the zone. Okay, cool. You can enter now instead of having to wait until the candle closes for the day, which could be like hours away. And then the candle could close outside the zone, and then it no longer is a good entry because then your entry is no longer able to be placed inside the zone. So I just use the lower time frames, meaning 1 hour or 4 hour. Like that's what I mean when I'm using those terms. I use those as a way to look at the candlesticks to just see that price is starting to move away from a zone and not immediately breaking it.
Okay, so wait till it hit the zone, then look at the 1 hour time frame to see the action, price action.
Yes. And what you're looking at on that 1 hour, like what you said is exactly correct. Go to the daily chart. Don't fuck around with anything. Just leave it alone. Leave the alert. Then whenever it gets the alert on the daily, then go down to the 1 hour. And then if it starts, you're only looking to just make sure price is not breaking past that zone instantly. If you go to the 1 hour and there's a huge bullish candle spiking up into a resistance zone, I would just leave it alone. I would just wait. And then if it slows down, the candles start getting smaller, then it starts having like a bearish candle dropping from the zone, and then you can still enter at the zone, then that would be viable. You can still take that trade. But if it starts like just going into the zone and closing bullish into the zone on the 1 hour, 4 hour, and it's just like there's like no momentum showing there's like selling sensitivity there. Just wait and leave it alone. When you start seeing that shit, a lot of the times it'll just break past the zone. But there are cases where it'll look like it's very crazy initially and you stay out, but then it kind of calms down and then things start to kind of like turn back around. And then you can get into the trade as it starts to look like it's going to be bouncing away from the zone. Does that make sense?
That perfect sense. Thank you, sir.
Yeah, good questions, man. Good stuff. All right. Samuel, you are up next. Samuel Adekunle. I don't know how to say your name. Adekunle.
Adekunle.
Say it again.
Adekunle.
Adekunle. Okay, I was close. All right, yeah. What's up, bro?
Quick question. I know you talked about the one-on-one ratio for your profit and stop loss. But my question is, do you also align that with the support and resistance on the daily? Say, for example, if the take profit is below the support of the daily, sometimes it bounces back, right? And maybe your one-to-one is way below the support level. How do you manage that? Does it align with the support of the daily candles, or how does that work?
Yeah, so I'll manage it in one of two ways. So let's make sure everybody else knows what Sammy's asking. The first thing is what Sammy's asking is saying like, hey, let's say you get into a trade, like you sell at resistance right here and your stop happens to be way out there, and then your take profit at 1-to-1 has to be down here, but that 1-to-1 profit target is past one of the next major clear support resistance zones, which, that this is not the clearest, but it's something, right? It bounced here, here, and then here a couple times. And so if your take profit has to go past that, Samuel's like, Nick, what do you do? What do you do? What do we do, bro? Should we take the trade? Should we not? Here's what I'll do. I'll do one of two things. Number one, and this is the case most of the time, I usually just won't take the trade. I'll skip the trade. That's it. Number two, what I will do is I will wait for a better entry. So let's say, for example, let's say you're going to be entering right here and it's already kind of outside the zone, right? But GBP AUD looks like she's going to bounce right now, right? So let's say it's already outside the zone and we have an entry there. We have our stop loss up here. Take profit of 1-to-1 is like that, but it's like past like the next kind of major area where it had bounced out a couple times before. That is a little bit more of a pain in the ass because, right, you could go here all the way close to your profit target, but then it could just bounce right back up here. And then now you're back to like small profit or break even. And so you've given all your profits back and you could have taken maybe a trade right there. So now you've missed out on profits from that next potential trade. So what I'll do is, let's say it sets up something like this. What I'll do is say, okay, I'm either not going to take the trade, which is usually the case, or I'll just set an alert at that zone where price was like where a more optimal entry is. Then what can happen is I can enter up here at the zone if price gets there, the same stop loss, but now my take profit at a 1-to-1 only has to be right here. And that is like at or a little bit before this next previous major zone. So it's one of those two things that I'll do, Sammy. Does that make sense?
Yes, got you. Thanks, Nick.
No problem, man. All right, Mr. Webb, Dr. Webb, you are up, man. What's up? Kenneth, you'll have to unmute your microphone. Looks like yeah, it's okay. Here, I'll try to ask to unmute again. Maybe it'll give you an option. Oh, now you turn your camera off. Oh, okay. Wait, no, yeah, you're back. We've got a heartbeat, guys. He's back. We just got to figure out. Oh, do you need to ask a question or no? Thumbs up, thumbs down. No, okay. Sorry, man. Yeah, if you could have got the microphone unmuted, man. I'm sitting here. I'm so sad. I won't be able to answer your question. This is gonna bother me the rest of the day, man. I'm gonna go throw myself off my balcony and unalive myself because now I wasn't able to help you, Kenneth. It's just gonna ruin my whole day, bro. JK. Okay. Does anybody else have any other questions? If you do, just unmute your microphone and ask me because we don't have anyone raising their hands yet. Wait for a second. A lot of good questions today so far. We've been on for like an hour. My computer battery is 8%. All right. No other questions, it looks like, it seems like. So, wait, there you are, Kenneth.
Hey Nick, you got me now?
Yep, go for it, man. I'm ready. I'm here.
Oh, yeah, man. Sorry about that. Yeah, I don't really have a question. I just wanted to say hi. I'm kind of new to the group. I'm really close to. I live in Abilene, but I'm like 30 minutes away from you right now. I'm sitting in Cleburne in a hotel right now on the chart. So thanks for this impromptu Zoom.
No problem, man. You know, I grew up in Keene, Texas, dude. I went to high school there. I grew up there.
Really? Yeah,
Yeah.
it's just right down the road.
Fucking Keene, Texas. I think the population now is like 3 or 4,000, like tiny. We would go to Cleburne for everything because Keene didn't have shit.
Yeah, yeah. I come here to work sometimes, but yeah, man. I'm sitting here on a 1 minute chart on the NQ doing a prop account. Dude, I'm just sick of this shit, man. I can't stand it anymore. I can't do it anymore. I like the higher time frames, the swing trading, because this is just not working out. I've been doing it for a year, not profitable. Bought courses like 20 grand of various courses, all on credit cards, and I just man, I gotta find a better way.
I'm sorry to hear that, man. I shared your struggle for about 2 years of existential dread and feeling like shit and feeling like everyone was right and people kept telling me how stupid I was to do trading, except for my stepdad. He's the only one who supported me. So I totally feel you, man. Trading is difficult. It's very, very challenging and hard. I think challenging and hard is an understatement. It can be like quite literally life sucking. So I get it. The
Yeah.
cool thing though is that you're in a good position now to learn because you're simplifying, you're peeling back the layers of all the bullshit and you're unlearning all the stuff that's really not necessary, needless complexity, and replacing it with just simple, basic things. That's all you really have to do. My question for you is how much capital are you working with trading with right now? Assuming that you were profitable, you'd already demonstrated profitability. How much capital roughly do you think you'd allocate to trade Forex with?
How much can I trade with right now?
Uh,
I have about a $5,000 account right now.
okay, cool. And how much is your risk tolerance per trade?
Well, I've only taken so this GCAD was the very first Forex trade I ever took. So I've been on futures and then lost money in options, all that stuff. So I'm new to Forex, but I've been doing about 1,000.
Okay, cool. So that's 20% risk of the account per trade. So a 5 trade losing streak at full stop loss would blow the account. And realistically, probably 4, because you wouldn't be able to take the 5th one because the account would probably be around 1,000 or less. So risking $1,000 per trade, does that suit your risk tolerance? Like, are you cool with that, or does it feel like it's kind of a lot and too much?
It's fine for me right now.
Okay, well, fair enough then. Perfectly fine. No problem. So you
I could
made, yeah.
I could do more than 5,000. That's just what I started with on the account. I mean, I don't want to lose it, but my wife's not gonna divorce me over it, I mean,
That's good. Yeah, my wife isn't going to divorce me if I lose this $900,000 account, and I can't say that too loud because she's actually sleeping right here next to me. Um, yeah, no, maybe she might be a little bit, tiny bit upset with me if I lost $1 million, but I don't know. Okay, well that's cool, man. I think 5K, if 5K is not that much for you, and it's just kind of like money that you're like, yeah, I mean, I don't want to lose it, but it's you're worth using it as like a form of tuition to kind of learn and gain experience, and you're perfectly comfortable risking grand per trade, perfectly fine. That's no big deal. It would take about 4 trades at full stop loss to lose the account. And realistically, it'd probably take you like 6 to 8 trades, counting all the partial stop outs and break evens. And that's assuming 6 to 8 trades with 0 wins at all during that period, which it could happen, but it's just very unlikely. So that's pretty cool, man. Yeah. I'm risking about like, anywhere from like 10 to 15% of the account per trade right now on average for my full risk. So about like, 100K, 50 to 100K, just depending. So that's good.
Yeah.
How much did you make on GBP CAD?
I mean, it was only like $100-something. That's what I don't understand. It's like I thought I got to get used to calculating the lot size and all that, but I thought I had $1,000 risk, but then it went almost all the way to TP, but it was like not 1,000, it was like $150 or something.
So that what that means is that you probably weren't actually risking $1,000. You thought you were because you haven't yet learned how to do position sizing. So a question, which platform are you using to place the trades on?
It's on TastyFX.
TastyFX. Okay, cool. I wish I knew how their platform worked, so that way I could help you with that. What I would do, like literally right after this call, sitting there in the hotel room, I would go to YouTube and I would look in like how to use position sizing on TastyFX and just learn how that works. So that way, you know, okay, if I want to risk this dollar amount for this trade, here's how I do the position sizing. Here's how I find out what the sizing should be. Here's where I put my stop loss and everything like that. It should be pretty straightforward, but you just have to learn how to do it. And that'll just take you probably a few minutes.
So it said I was using $1,000 a margin, but is that different than
That's right.
the actual count?
That's different. $1,000 of margin, that just means 1,000 quantity. So 1,000 quantity is the same as what's called a mini lot in Forex trading, which is 0.1 lots. This is all a bunch of bullshit you have to learn. So I guess a simple way to learn this, I would go to what is lot size in Forex trading and then how to calculate your risk per trade. The cool thing is I think I made a video about this years ago. Nick Sean, how to do position size. How I manage my portfolio with Nick Sean's hedging strategy. Okay, so I thought this would be here on YouTube. But no. I'm going to send you the link. How to choose the right lot size. All right. This is a full instructional video on how to do it. I made it 2 years ago. I'm going to get the link and share it with you, but I still want you to go in and I still want you to watch how to do this on TastyFX. Your Discord, let me unshare my screen. That way I don't share shit with like everybody here. I will just send you this.
They have a lot of educational videos. I just barely signed up like last week. So I need to get on there.
Okay. What is your Discord account? I'm trying to JF Kenny?
No.
Ken
I think it's KWCRNA maybe.
KWCRNA. Send me a message in Discord right now, and then I'll drop you the link. And then you can also go and watch, like, just find like a TastyFX how to do the lot sizing video. But that shows you the logic. The video I made, it just shows you the logic behind everything in the explanations.
Okay. Thank you.
No problem, man. All right, my friends, I've got 4% left on my computer right now in battery. So if any of you have a quick question, we can do it. And if not, we will call it a day. It's been like an hour-and-a-half long live session, and the recording of this will be posted in the Nick's Trades group. So I'll wait here for a second. Any questions? Anthony, yeah, sorry, Anthony, yeah, sorry, bro. I was looking down. My bad. Go for it.
Anthony, hi. It's Anthony here, Tony Trader. Not a question, just wanted to say hello from Manchester, UK. We joined last month and it's been absolutely brilliant. Really brilliant. And I think the only way you can appreciate something like this is to go through all this scalping, 1 minute, 5 minute, 15 minute, like you said, all the different, we've done everything. And then you appreciate the simplicity of how you trade. I think that's what I would say to anyone on here who's new to trading. I think you appreciate Nick's way more when you tried everything else.
Mate, I'm lovely to hear that. Lovely to hear that, mate. I get so knackered sometimes. I have to go and shag the missus before I come back. You know, to be fair, mate, I'm just a simple bloke, but sometimes it just doesn't work. I get stressed. But yeah, no, it's true. Sometimes you have to go through all the bullshit of trading the 12-second chart and just like cortisol and adrenaline spikes for 15 hours a day before saying, you know what? There is a better way. And then I come to you with my bald head shining super bright and a bright white shirt with my arms extended like Jesus Christ himself, saying like, hey, Anthony, you know, you could do this like a lot more simple. Like you should just learn this way instead. So I really appreciate you saying that, man. And cheers here from Texas.
Cheers, mate. Take care, buddy. Take care.
Yeah. See ya. All right, guys, I had fun. Recording will be posted in the Discord server once this gets uploaded to YouTube. I really appreciate all of you hopping on. And I also want to compliment every single one of you on here who asked a question and all of you who are participating and joining. It was a really productive live session. Everyone asked what I thought were fucking amazing, really intelligent questions. and nobody interrupted each other, and there wasn't like a bunch of bullshit. It was a very focused, clean live session, aside from the cursing. But aside from that, everything else was really, really great. And I just want to thank you all for making it such a productive live session, because the way it's productive is by people like you who are intelligent getting on and asking nice questions and not interrupting people and not acting retarded. So I really appreciate all of you. Thank you guys for not being retarded. That's great. All right. I'll see you guys in the next live session whenever we do it.
Thank you.
Cheers, everyone. No problem, Daniel.
Hey.
See you, Daniel.
See ya.
Anthony, Robert,
Cheers, mate.
Nuno,
Take care, buddy.
Cheers.
Take care.
Cheers, mate. Cheers, everyone. All right. Bye, guys.